Hey everyone, and welcome to Project Premium Harvest. My name is Matt. Before I dive into this video, I want to start off by going into a dream scenario, right? So imagine what could you do with an extra $100 a month, right? Maybe you can pay for some groceries, maybe get a couple of tanks of gas for your car, maybe go for a nice dinner, cell phone bill, whatever, right? That's what an extra $100 a month can do. Now imagine making an extra $1,000 a month, right? We'll use that same thought process. Okay, we can maybe pay for some of our rent, maybe some of our mortgage, a car payment, right? What else? Maybe like you could finally take your kids to a baseball game, or maybe you can comfortably, go fly to a destination for a plane ticket, right? That's what an extra $1,000 a month can do for you, right? Now imagine what could $10,000 a month do for you. That could replace your daytime W-2. You wouldn't need to work anymore. That would be enough to cover your expenses for either a mortgage or for rent, car payments, literally your entire lifestyle. As long as you keep it modest, for $10,000 a month, you wouldn't need to work anymore. Now let's take that $10,000 and push it to $100,000. Let's just dream a little bit, right? Imagine making $100,000 a month. How different would your life be, right? You can get the car that you want. You can buy the house that you want. There's just so many different things you can do with $100,000 every single month. So what I'm trying to show in this video is identified an opportunity, right? Where this could potentially be a reality, making an extra $100,000, $10,000, $100,000 a month. And this is my way of trying to test to see if this is actually successful. So let me dive in what I'm actually going to talk about in this specific video. So I'm going to talk about what is Project Premium Harvest, but kind of from our little thought process, you can get an idea that, okay, it's going to be something about making money, right? So we're going to be doing that. What is the goal? Why I'm doing this strategy? The different strategies I am employing for this to be successful, and to test a couple of theories. Then I'm going to discuss why I named the channel Project Premium Harvest. And then I'm going to give you my final thoughts of the reality of this actually happening, or if this is just going to be a total failure. So let's dive into it. All right, so you're wondering, what is Project Premium Harvest? Project Premium Harvest is borrowing money to make money, right? And the goal for this project is to make a monthly income stream. So what did I do? I took an $83,000 HELOC loan against a property I own. I took that $83,000, put that into Robinhood, borrowed against it using margin to buy these YieldMax funds called NVDY, TSLY, and AMZY. Why did I do this, and what is the potential? So the potential return on these funds altogether is somewhere between $5,800 to about $13,000 every single month. And if you annualize that, that's about $69,000 to about $164,000. So there's a lot of potential with this project, and this is just the beginning. All right, the why. This is a very important reason as to the purpose of this project in the first place. So personally, my circumstance is going to be different than everybody else's, but I'll kind of wrap it up at the end here. I'm already doing all the right things as an adult. I'm maxing out my 401k, maxing out my Roth IRA, maxing out my health savings account. I already own a primary residence and a rental property. So for me, I'm already doing all the right things for long-term wealth, right? But the only issue I have with that is I don't want to wait until about 59 and a half before I can start collecting this money. There's one thing in life that you can never make more of, and it's time, right? You can never get your time back. You can always make more money, but you never get your time back. So for me, I'm already doing all the right things for, long-term wealth. If you estimate what I'm going to make when it's time for me to retire, it'd be somewhere between like $6 to $11 million, as long as everything stays the same. If I stay at my job, no changes, right? But for me, that was a no-go. So I wanted to figure out a different way so that I can be financially independent, so that I don't have to, work a full-time job. If I want to work, I could work. I can work something I'm passionate about, find a passion project, right? And so this is my circumstance. So that's why when these YieldMax funds came out, they were super lucrative to me. Initially, I was very hesitant. Everyone kept talking about these NAV erosions, all these problems with these funds, but then you start looking at it, and then you look at all the money people are getting from premiums every single month, and you're like, oh my goodness, this is too good to be true. There's got to be a downside, and we'll discuss that in a minute here. But my circumstance is different. Your situation might be totally different, where you're not saving enough for retirement. You might be 40, 50, 60. You're already at retirement and you don't have enough money. This is a potential solution where you can find a buffer to help you during that time, during that retirement. You know, it's like what we were talking about earlier. Imagine what you can do with $100 extra during retirement, an extra 1,000, extra 10,000, and then potentially $100,000 extra, right? So this strategy can potentially help you have a more comfortable retirement when it comes to age. All right. So the goals for this specific project is I'm trying to pay off the HELOC loan as fast as possible, right? And then goal number 2 is I'm going to maintain my Robinhood margin value. So for me to borrow $75,000 in margin, it's very cheap. It's like $383 a month, but I'm making thousands of dollars off of that margin payment, right? And my house isn't at risk. So for me, if I need to get rid of that margin as well, I can just sell off my YieldMax shares. And then step number 3, if the strategy is deemed safe, that if I pay off the HELOC loan successfully, there wasn't too much of like a market crash, I'm still getting a relatively good premium, I'm going to keep taking out HELOC loans until I finally build up my portfolio to a number that is satisfactory to me. I haven't came up with that number. Will I ever be satisfied? Hard to say, but that's kind of what the goal is for right now. All right, guys, now let's talk about the strategy. I'm adopting 4 strategies for this specific project. Those strategies are the 75-25 model, 50-50, full send, and then a 1-for-1 swap. I'll go into more details later on. All right, so the first strategy here is the 75-25 strategy. So what this means is that I am paying back 75% of the premium to the HELOC loan, and the other 25% I reinvest back into the YieldMax share I'm invested in. So specifically for the 75-25 model, I'm invested in NVDY. So as an example, let's say for like the month of September that's coming up, NVDY pays me $10,000 in premiums. So basically 75% of that $10,000, which is $7,500, is going to go towards paying back the HELOC loan, right? And then the other 25% is going to be reinvested back into NVDY. So the reason why I'm reinvesting back into NVDY is for 2 main reasons. One of them is that over time, I want my premiums for NVDY to grow over time, right? Because that means that the more shares I own, technically means the more premiums are going to, I'm going to get, as long as the premiums stay consistent or stay higher, right? And then the other reason was for the NAV erosion, right? So the more shares you buy at a price, it evens out the value so that the NAV won't be as impacted. But the thing about NVDY so far, since I've invested, it hasn't gone down too much for me to notice the NAV erosion just yet, because it keeps kind of going up and recovering from whenever it gets its ex dividends, and then it's still pretty high growth. Hey, so before I go diving into how this 50-50 strategy works, I'm going to discuss the background of where it came from. So for me, these YieldMax funds are very infant, and they don't have any long-term data to analyze. So we don't know how they're going to perform over time. So I decided to come up with a strategy so that I can at least lock in my gains in the case that these funds do fail, right? That's where this came from. So this works is I'm invested in AMZY. So let's say, for example, I get a premium of $10,000. So 50% of that $10,000 is going to be reinvested back into AMZY for 2 reasons, right? It's kind of the same as what I discussed earlier in the other strategy, but combating NAV erosion. And then we're also, over time, the premium is going to be increasing because you're reinvesting back into the fund. And on the flip side, the other 50% of this distribution is going to be invested in a core foundational holding. What I consider a core foundational holding is an ETF that doesn't change in value too much. So it considers SPY, VOO, like SCHD, something like that. But for me, I'm personally going to invest into SPY with the intent that eventually when I have 100 shares of this, I'm just going to run covered calls against them and then make an additional premium every single couple of days or every single couple of months. All right, here for the 100% reinvestment strategy, this is where I'm going to be reinvesting 100% of my Tesla premiums back into itself. One of the reasons why I'm doing this is because whenever I crunch the numbers of these YieldMax funds, whenever you reinvested 100% of the distributions back in the fund, you're making significantly more money over time. Like 4, 5, 6 years, you'll be making an extra, $10, $20, $30,000 a month. So for me, I'd be willing to risk it on one specific ETF and see if that's even a reality. So hopefully fortune favors the bold. All right, guys, hopefully I do a decent job of explaining how this 1-for-1 swap works. But basically the idea is that you estimate the premium that's on the declaration date, and you buy the shares on margin on the ex-dividend date. Now let's run into an example here. So let's say on the declaration date, YieldMax came out and say they're going to pay $1 per share, right? And say you have 1,000 shares of X YieldMax. And then so you know the premium, if you have 1,000 shares and $1 per share, it's going to be $1,000 of premium. So you know that value on the declaration date, right? So you kind of keep that in the back of your mind. So on the ex-dividend date, you then take that $1,000 and buy the shares at a cheaper value, right? Because if you look at the slide, before the ex-dividend date, the shares were going to be trading at $10 a share. On the ex-dividend date, because they're paying you $1, the stock price is going to drop $1 because YieldMax takes that $1 out of the share price to pay you, right? So then on the ex-dividend date, the shares are $9, so you're going to buy them cheaper, right? So if you just would have bought the 100 shares after the ex-dividend date when you finally get paid, you'd only get like 100 shares. But if you bought on the ex-dividend date using margin, you would have bought 111 shares, right? If the price jumped back up to $10. So to borrow $1,000 costs almost 19 cents a day, but then you're able to buy 11 shares, right? So right now you're like, oh, 11 shares doesn't mean much, but that's 11 extra shares that then will pay you more premium later down the line. And over a year, that's an extra 132 shares, right? So, and then we're just thinking in a year, but imagine 30 years from now, how many more extra shares that would be. Yeah. And then in over a 30-year period, that's going to be an extra 3,960 shares. So that is significant. It may seem small now, but those little steps, those steps matter. Also, you're not keeping this margin forever. You're literally just holding this margin for either the ex-dividend date, 1 or 2 days, so that on the premium date, you get paid back and then it like nullifies or voids that $1,000 you just borrowed. All right, guys, let's start talking about the concerns with this specific type of strategy, using YieldMax in general, using debt in general. And so hopefully I can maybe reprogram some of this thinking. But let's do the first topic here where it says, why take on debt? So let me ask you guys a question. Is it okay to take on debt to buy a house with a mortgage? Is it okay to take on debt to buy a car for transportation? Yes. Right. Is it okay to use debt to buy food because you need to eat? Absolutely. Use a credit card, right? Whenever you need it. That's what it's there for. When you don't have the money, you can temporarily use it to buy things that you need. So why isn't it that you wouldn't use that same mentality towards using debt to make more money so that one, you can buy the food, you can buy the house, you can buy the car, right? So for me, it's kind of the thought process. So taking on debt for a good reason is a good thing, but taking on debt for bad reasons is a bad thing. It's obvious, right? And in the circumstance of YieldMax, right? So the amount of debt I am personally taking out is far less than what the yield for the YieldMax funds are, right? So my debt is usually about $1,200 per month, right? Of debt between HELOC loan and margin payment. But then what I rack up in premium and in the distribution, it's about $5,800 to $13,000. So for me, I did the research, I looked at my different options, and then it was too good to be true. So I had to try it. I took the loan out, and it's been about coming up on the 4th month anniversary, and we're going to see another fat distribution payment, and it's going to continue moving forward. Another key point I want to hit here is the cost of debt. The cost of debt is comparatively low to the loss potential of your future, right? As long as you do the research of the fund you're investing in, don't over leverage, don't over borrow, and then this will succeed. Right now, let's dive in a little bit towards the mentality for debt, right? So I have an issue with Dave Ramsey, right? It's this guy that's a financial guy that tells you to like, don't ever carry on debt. So the day I lost respect for this guy is when he said he'd be given like $1 million or $10 million with a 0% interest rate. He said he would say no to that. And for me, that's literally free money that you don't have to pay an interest on. Why would you not take it? So that's the problem with today's society is people have such a bad relationship with debt that they're either deathly afraid of it because they've gotten bit by it, but two, they watch people like Dave Ramsey who are saying like debt is the devil. It's not. If you use it effectively and you're smart about it, you make up a risk management. Hence, that's why I came up with 4 different strategies to like make this project as successful as possible, right? If I just started throwing money and I wasn't doing research, this is going to fail, like as with anything in life. So if as long as you take the time, do the research, put the time it deserves towards coming up with a strategy, it doesn't even have to be anything what I'm doing. You can come up with something different and tailor it towards your specific needs. But for me, we have to rethink how we're thinking about debt. How do you think rich people make money? How do you think real estate people get rich off of debt? They use debt. They don't have money to buy $1 million house, but they have enough to bank that they can put some upgrades into a house, sell it, or get a couple under long-term rentals, and that's how they make money. Same thing with the stock market. Anybody that's like in a ETF or stockbrokers, they are using your money so that they can become rich, so that they can drive the Lamborghini. And so for me, we have to stop being afraid of debt. Who cares? I don't know what's more scarier than debt, right? Is living a life that's just very mediocre and boring and just never having enough. That to me is worse than just having a little number in a bank account that says, oh, you're behind. It's not that big of a deal, right? As long as you're still getting positive and then you're getting a net benefit from the debt. If you're using debt for bad, obviously don't use it if you're that afraid, if you've been bit by it. But if you use it the right way, this can change your life. I'm trying to get this point across here, right? So that kind of goes in hand with the reprogram our thinking. And then I'll add another point in here, just like the infancies of the YieldMax funds. So here's another point for NAV erosion that's kind of more idealistic than it is more for details. Is, it's more afraid of NAV erosion, is working for a lifetime to scrape up a subpar retirement and then hope Social Security will be there when it's time to retire at 80 years old, because the age requirement keeps changing and eventually the fund will run out of money. And the last thing about YieldMax funds that I am concerned about is the infancy of the funds. Right now, during this span of time, there is a bull market. And with this bull market, stocks go up and things are going great, right? But I'm a bit worried of when there is going to be a bear market. And there was even like a little correction in August of 2024 where my account value just dropped $30,000 in a span of a week for no apparent reason, right? And then all of a sudden, 2 weeks later, it's back up to normal, like nothing happened. So for me, if something like that happened, how would I react to it? And that's why I'm coming up with some of these strategies, right? When I'm done paying off the 75-25, I'm going into a 50-50 strategy because I want to make sure that all of this stress that I'm putting on myself, eventually there's going to be something left at the end of it. So that's why after the 75-25 model, I'm going to put into a 50-50, right? Especially for NVIDIA. And just the infancy of these funds, they're so new. We don't know how they're going to perform over a bear market. We don't know how they're going to perform long-term. The erosion is bad. From what I've noticed so far is when there is a ETF with like more than like, I don't know, 7 like stocks that it's choosing from to run option strategies on, that's when I noticed the NAV erosion is definitely a lot worse than a company like NVDY, where it's absolutely exploding right now because of the whole AI boom. Is there going to be an AI boom crash? Hard to say, but right now I know for a fact that there's a line for NVIDIA's chipsets that are at least 1.5 to 2 years out, and that's going to be long enough for me to cash in and cash out. But if you choose the right, stock, like an AMZY, NVDY, like their NAV erosion is not as impacted as others that are more volatile. Like say, for example, MSTY, where it's so volatile where it gives you a nice premium, but because of how much Bitcoin fluctuates, because this is an option strategy, you'll never be able to recover the value fast enough. So that's why I don't really like investing into MSTY or things that are very volatile. You usually want to choose a stock that isn't as volatile, right? So that's why TSLY, for example, even though I'm invested in it, I think it's a bad example because whenever Elon Musk goes out and talks, the stock can either fluctuate up or fluctuate down for no apparent reason. There's nothing to do with fundamentals, nothing to do with its quarterly earnings, things like that. So for me, for this strategy to be successful, you have to choose stocks that don't fluctuate too much, but they get their consistent 10-20% growth every single year, and then it just keeps going up. And that's how the NAV erosion will not be impacted as much. But is it a thing? absolutely. But what's worse than NAV erosion is still being poor, still not having a monthly income. So that's a risk that I'd be willing to take. That doesn't mean much to me, because even if there is NAV erosion and stocks get cheaper, that means I can buy more stock at a cheaper price and still continue to maintain a premium. That sounds pretty good to me. Are there going to be millionaires out of this? Maybe. Are there going to be a lot more broke people? It depends. But if you're willing to take the risk and you don't like how your life is looking right now, then take the risk. What's stopping you? Yeah, so if my circumstance, I was lucky enough to have a rental property to borrow against, right? But if I didn't have a rental property, I'd do a personal loan. If I didn't have a personal loan, I'd figure out a credit card, make sure that the distribution I'm getting is more than the credit card payment. And then same thing, you have to be creative in today's society, because in 10, 20, 30 years from now, the work landscape is going to be a whole lot different. Like, I'm in tech right now, and just the idea of AI is coming around. Like, there's in 10 years from now, 90% of the developers might lose their jobs, because you just need one developer with a bunch of AI tools that can write all the code for you. So this is kind of like a hedge and a way to protect yourself for the long term. All right, now that we got some of the serious topics out of the way, let's get into something fun. Why I created the name Project Premium Harvest. So I wanted to equate this to farmers, because I always idolize them, because they're the ones that keep the entire world running. Never been a farmer, but just appreciation for them. But here's just my thought process for the channel naming. So the way I view seed is like stock. And then planting seeds is buying these YieldMax stocks. And then the crop growth is the options being ran by the YieldMax team. We don't really know what exactly they're doing. I think they come out with a spreadsheet or something every night or after trading hours, but I've never looked at it. Maybe I might get into trying to figure out how they come up with all their premiums, but more to follow later. So the talked about the crop growth is just options being ran, but then the harvest, I call the harvest is reckon in the monthly premium. So on the premium date, you get paid, we harvest the money, good to go. So I wanted to come up with something creative, wanted to be different, didn't want to be like everybody else. Simple enough. All right, guys, here are my final thoughts. I think that we as human beings need to stop thinking too small, right? Our life is too short and too precious for us to be working away at a job that either we don't care about, or it's doing something that just to pay the bills, to support your family. And to kind of go back to my initial dream scenario in the beginning, let's revisit what the $100 a month look like. What would $1,000, $10,000, $100,000 a month can do to change your life? Just kind of keep that in thought, keep that in the back of your mind, and figure out like, hey, what do I need to do to be successful? Stop taking the ordinary route that everybody else is going. All the people that ever were successful in this world never took the ordinary route. The only people that succeed in this world are ones willing to take the risk. Be that person, change your life. I'm not a financial advisor. I'm just an average guy, but I saw this opportunity and I couldn't say no to it. I have to see it through. And hopefully this channel gives you enough detail analysis for you to either say yes to this strategy using YieldMax, or absolutely no, this is hot garbage. So I'm willing to do that for you guys. Hopefully that you enjoyed my content. I hope that you can like, subscribe, leave comments. I read every single comment that I can and try to leave my thoughts. And yeah, so hope you guys enjoy. See you around.